we want to further categorize tangible assets. Generally speaking, it falls under either of these four categories. It could be a type of furniture that you see in the office, a type of machinery, equipment in the warehouse running around to support inventories, inflow, outflow. Could be buildings. Of course, you need a location to sell the products, or you need a location to set the office. And also, before doing that, you need a piece of land, of course, to construct the building. Right. So land improvement is one category: building, machinery, equipment, furniture, fixtures. And when you go back to read the chapter this week, you'll find this area pretty exhaustive because there's a lot of different types of cost that goes into each and every category. So don't bother to memorize all of them. Okay, the key point here is to understand what is the cost of the asset, and usually the problem will tell you what is the assemble cost, what is the transportation cost. So each and every company would have a different transaction. They may not hire people to assemble the machinery. Some companies may want to hire people to assemble machines. So you don't have to memorize each and every category of the cost under these four categories of tangible assets. The key concept is to know that when a problem tells you there's so and so different types of costs incurred for a piece of asset, you need to add them together. Okay, so if it tells you purchase price, that's one thing. If it also mentioned taxes, then you add taxes. If it mentioned commission, you add commission. If it mentioned assemble costs, you also had to add them. So the key point is to know that all the other minor costs to support the asset to meet its intended usage before you actually start using it in the business, those are all considered necessary costs. So it has to be a sum of all of them. Okay, introducing all the details under these different accounts is just for the purpose of letting you know you have to add them together. Those are all considered costs of the specific asset. Okay, so the only category that we'd like you to focus on really is the first one. Why? Because I mentioned land is not depreciated. However, there's another account called land improvement. These are separate accounts. Okay, land is not depreciated, but land improvement is. So this is the only one that I would like to ask you to know the details. You have to differentiate what is considered land's cost, what is considered land's improvement. Because if you mix them up, you'll be depreciating the wrong thing. Okay, so any cost that goes into land, later on the next two slides I will talk about these, those are not depreciated. You just have to add them up. That would only appear in the first entry when a company purchases a piece of land. Land improvement, anything that basically goes on top of the land. Think of it as minor costs, decorating the land, the fences, sprinkler systems, signs. Those will be depreciated along the years. Okay, so this is the only thing that I want you to keep in